What's going on, everyone? This is AJ with the Blue to Green podcast. Thank you very much for tuning in. This episode's going to be a little bit different. Never once in my life did I think I would be sitting down talking about insurance for nearly 2 hours. And I hope you all will stick around. And even if it's not material that you think you need, but do you own a house? Do you own a car? Do you rent an apartment? Do you have anything of value that you want to protect? Do you have grow equipment and plants that say that they get wiped out in a house fire or a catastrophic flood or damaging monsoons or whatever? Did you know that, all these things can be taken care of by insurance? And that's actually why I think it's relevant to the cannabis community because, again, it's uncharted territory. And what happens if you have one of those big, expensive grows in your homes, within legal limits, of course, and something happens? You need to be protected. Also, I just think this is important information for people to know and understand, especially as they get older in life and, things that I was never taught and was never really talked about. So I hope I'm bringing you good content and good information. And like I said, I understand that this episode's a little bit different than my norm, but I still enjoy sitting down and talking with great people and having good conversation. So on that note, I sit down with an insurance agent who I met several months ago and had a very interesting conversation with by the name of Alicia, who goes by the name of Bama. You'll hear why. So she does an excellent job of explaining this, and also she does a fantastic job of keeping it interesting and relevant. And she took the time before coming on today to actually do some research regarding coverage of cannabis plants and grow equipment and all that type of stuff. So again, I hope it's relevant information. I hope that you enjoy it, and I hope you stick around. I truly do. And again, I know it's not the sexiest thing to talk about, but it's important. So, all right, everyone, thank you very much. Take care. Oh, yeah, and I will put her contact information as always. So thank you very much, everyone.
He threw some things out of the car right there. He's throwing some things out the passenger side. They're along the wall, the slow lane wall. 619, he's throwing dope out the window. We got bills of marijuana coming out.
619, I copy bills of marijuana coming out of the window at 2328.
So I do everything, on the fly. I don't like, and I don't edit anything out, and we can cuss. You can say whatever you want, so it's not a big deal.
You're asking for it. Let me get my notes pulled up for the things we're going to cover. Okay.
So, all right.
Hey.
Welcome.
Thanks for having me.
Thank you very much for coming onto the podcast. This is my podcast, the Blue to Green podcast. I got to do my little shtick at the beginning here.
Of course.
But if you wouldn't mind just giving just giving everybody a little introduction as to who you are, and then I'll kind of fill in the gaps as to what we're doing here and how it's definitely different and odd, but this is going to be the first of its kind. Okay. I can tell you that right now.
Well, my name's Alicia, and everybody calls me Bama, so nobody really knows my real name. I'm keeping it incognito, I guess. No, I'm just playing. But I'm an licensed insurance agent. I'm actually licensed in 11 states, so Arizona, Ohio, Illinois, all those Texas. So a lot of those ones I'll be going over today will be the ones I'm aware of. So, okay. And I work for an agency, so I have a lot of different carriers available to me. So I'll be saying this not for one company or anything like that. It'll be for multiple.
And we're not here to promote your company or anything like that. We're here to talk about insurance. Mm-hmm. And then on top of that, we're here to talk about insurance in the cannabis world and how, we were talking about equipment and plants inside of your house and all that stuff. So in just a real brief introduction, I met you through a mutual friend. Mm-hmm. You have since become my insurance agent. Mm-hmm. And so that's how this conversation started. And on the phone, we had some really long conversations regarding just insurance in general.
Right, yeah,
and
exactly.
This is one of these things that I know that some people are going like, why is he talking about insurance? But then when you look at when you own cars and houses and assets and life insurance policies, and then moving into the cannabis world when you're starting to have grow equipment in your house and plants that are worth money and all that type of stuff, all of this stuff. I don't grow here yet. Mm-hmm. Because I can keep children alive and I can keep dogs alive, but I can't keep plants alive. I can barely keep my grass out in the backyard alive. Yeah. So, but that's what you're here to talk about is insurance and why it's important in all the different aspects. And you had made a comment earlier about just because it's full coverage does not mean it's good coverage.
Right, exactly.
So I think I think we should start from there.
Right.
I think that's a good jumping off point.
So let me start off by saying that I was once a consumer, of course, I'm still a consumer, but before I did this for a living, I knew nothing about insurance. So I tried to remember back to when I was learning about insurance and taking my test and the things that, for better words, pissed me off. I was like, why had no one ever told me about this? Why am I just now finding about this? I've had call center agents, I've had private agents, I've had all these people, and I never know that there was a limitation to what each thing covered. I thought it was, oh, I've got full coverage. We're fine.
Right.
And that's where I guess my passion stems from, is just trying to make sure that I'm educating people regardless if they're my clients or not. I'll tell people, hey, I'll price it for you. At the end of the day, as long as you know what's covered and you're not going to be mad at me, then that's what matters, is that you have the power and you made the decision. It wasn't somebody else making the decision for you. And my husband's a veteran. There's so many different situations, and it's very important to be kind of open and transparent with your agent. That way you can have those discussions.
Well, and the one thing that we talked about is the fact that I've had the same company for 24 years and I have no rapport with them.
Right.
I just call them up and say, I got a new vehicle. And they say, okay. And they throw it on. Right. And then that's what led my conversation to you, is my bill jumped up significantly. And it was because, and this is where you'll fill in the gaps, my life insurance policy changed from, because I've had it for 20 years. So it changed from one type to another. And when it did that, it was a significant jump. And it's something that I can't afford right now.
Right. Of course.
So that's when I called you. And then when you actually started to, like my insurance agent, I'm not knocking him. I've had great insurance for years, but I have to break up with him. I'm sorry. So that's what I need you to call him and do the breakup for me.
Yeah, exactly. I do that a lot.
But that's where you started. I told you, like, you're speaking over my head, but then you broke it down. Like, this is a good idea because this is what it covers. This is what it means, particularly on the life insurance side of the house.
Exactly.
And then it was having that explanation that nobody gives. You know, you need car insurance. That's it. You know, you need, I think pretty much, and again, my background in law enforcement was very, very limited. I would just ask people, do you have insurance? Yes. They'd hand me an insurance card. That's the end of it.
Right. Yeah.
So, as long as you have liability, if you don't have a lien, correct me if I'm wrong, you can have just liability.
Yes.
But if you have a lien on the vehicle still through a bank, then you have to have the full coverage.
Right, because liability covers the other person. So they're just making sure that, because liability just covers what you do to other people.
Okay.
That's what you're liable for.
Okay.
What you're responsible for legally
Okay.
replacing. But even then, on that front, so people go, oh, okay, I've got liability. Well, liability doesn't mean you have bad coverage.
Gotcha.
Because it's how much you're legally responsible for. So let's just say if you would back out of your, okay, state minimums for Arizona is $25,000. And I know everybody sees these numbers on their insurance card and they're like, I don't know what that means, So it's $25.50, which is bodily injury, $25,000 per person, $50,000 per accident. Okay. Well, if you're anything like me, most people know $25,000 ain't gonna pay for shit.
Yeah, that's the bare bones.
Yeah,
that's not going to pay for anything.
No, it's not. So, having that kind of, and then also the biggest thing, property coverage, the minimum in Arizona is $15,000. So if somebody backs up, if you had state minimums and you have $15,000 and they back up and hit a Tesla and they don't know they have that, well, $15,000, let's say minus $100,000, who's going to pay that $85,000? You are.
Yeah, out of pocket.
Yeah.
Cash.
And you didn't even know. And what they're going to do is there's going to be, and I'm not going to say exactly, I'm not a claims adjuster, I'm an insurance agent. I just know that during the legal process, what they're going to do is they're going to go to court and then they're going to say, okay, yes, you are legally responsible for that. You are underinsured.
Right.
And then if you have any assets at that point, they're up for grabs. They're going to put a lien on it unless you have the money to pay it up front. So if you have that 85 sitting in savings, which I don't. if y'all do, good for you. Call me.
Right. No, we'll put her contact information at the bottom.
No, but seriously, $85,000. Who just wants to give that away?
Right.
And that's where I've seen in the past where it's frustrating, because I remember even me, if I would have backed up and hit one of my own cars,
right,
it would have been covered fully. That's craziness. $25,000. My Jeep's worth $50,000. So if I would have hit my own car in my driveway, and it totaled it for some, like if something would have happened.
Bent the frame, did something serious to it.
Yeah, it wouldn't have paid out my own. I would have been responsible for paying the difference, and I had no idea of that. And I think that's the most upsetting for me, is just nobody's out really trying to educate people and really say it in a way that makes them open their eyes or understand it.
Yeah, no, I agree completely.
Yeah.
I grew up, my biological father was an insurance agent, or I'm sorry, insurance broker. And again, I still didn't understand these things, even though I grew up around it, and why it's important. Just like you said, I mean, vehicles now, a Honda Civic is starting at $35,000 to $40,000. You know, so vehicles, I mean, pickup trucks are going for, you know, an
80.
F-350 minimum.
Yeah.
Minimum.
Yeah.
A Ford F-150 Platinum is about $115,000 right now.
Yeah. And everything's up right now too.
Yeah.
So, you know, but what's funny about it is seriously going from 15,000 to 100,000 is $1 or $2 a month.
Okay.
You know, so why aren't people saying, hey, bring this up? It's because it doesn't make them any money.
Right.
You know, $2 don't make me no money, but I have to answer your phone calls. I don't have to, but I do as an agent. I'm just real personable with my people, but I'm answering those phone calls, and I have a moral compass. You know, a lot of people lack that, sadly, and especially if the call center, you're just another number.
Right.
And I'm not talking badly about any companies. It's just that's the job. That's what they're there for. Your agent is supposed to be that person that's having these conversations with you. But sadly, I think for one, it's a lot quicker to get people in and out of the door.
Oh yeah.
When you're just going, okay, cool, that's what you got.
Yep.
But ultimately, you're doing them a disservice. Yeah.
And again, when something happens, now they find out that they're liable.
Right. Yeah. And I have that conversation right away. I'm like, okay, I'm fine. If you want to have statement, that's fine. But I want you to repeat back to me. And I'm kind of a little sassy. So,
No.
yeah, just a little.
No.
But I go, if you hit a Tesla and you got 25,000 property coverage, because that's the next step up, and that's what most people have, I'll say, where are you going to get the money for the 75 grand? And as long as you're okay with that, and we're on an understanding that I've told you that, then we're fine. I'll let you have what you want. I've never had anybody actually take that, you know, especially when I say it's $2, sometimes $2 a year,
Right.
to move it up to 100,000. And they're just going, you know, and but it's not for me making them feel stupid. I definitely don't want that. I want them to just realize that these aren't just numbers on paper. This is your wealth we're protecting. My job is to protect your wealth.
Right.
Or protect what's important to you. Even a renter, even a kid that's 21 and got his gym bag in the car, and he's got his, you know, his phone, his computer for school, his school college books that are expensive.
Yep.
You know, those people, if they have a renter's policy, their stuff's covered in their car, you know, if it gets stolen. If it's not, if you don't have a homeowner's policy or a renter's policy, nothing's covered in your car if it's stolen.
So, you know, okay, so that's something I didn't know. So say I go to the gym and I've got my whatever in the trunk, and it's, you know, I've got a couple $1,000s worth of my podcast equipment because I'm moving from here to there, whatever. And it gets stolen. That's covered under my homeowner's insurance.
Well, yes, it is. The quick number is yes. Now, as your agent, I'm not going to say if it's under 2,000 or 3,000. I'm going to say it's not. It'll be foolish for us to do a claim that's small like that because it's going to affect our rates for the next few years.
Oh, okay.
But on a renter's policy where it doesn't really so much stay with you, as a homeowner's does, that it would behoove you to do that. You know, because what, $6 a month for a renter's policy, $12, depending on how much coverage you have.
Right.
That's not going to be so much of a rate increase as something that's $1,000, like your homeowner's insurance.
And correct me if I'm wrong, but you can, if you and your spouse are married, you can get renter's insurance even if you live in the home that is not being rented out. Or do you understand what I'm saying?
Right. So if you're not the owner of the home.
Okay. If your name is not on the title.
If your name's not on the title and you want a renter's policy to cover your property, then yes, you can have a renter's policy separately. That is much, because ultimately a renter's policy is not covering the dwelling, the home, the structure.
Okay.
It's just covering your personal property and your liability. So if somebody slips in your area, or if I was in your area. Now this is more, if you're not making money off of this, then this doesn't matter.
Okay.
It's not, you don't have to consider it a business.
Okay.
But if it was a business use and somebody slipped, then you should have had a commercial policy. So
Gotcha.
There's so many little caveats to that. But let's just say I'm visiting you, you don't own the home, you're renting, or what, you're responsible for your own stuff.
Gotcha.
Then you would be able to have that policy, and it would cover up to whatever the limits of liability are for somebody slipping, hurting themselves, and so you don't have to make the homeowner pay.
Okay.
You know, you don't have to depend on them to do a claim, because some people live with their parents,
Right.
But their parents are not going to do a claim for their gym bag.
Gotcha.
So, and they might even be paying their parents' rent. I mean, I'm not saying for a minor to have a renter's policy. I'm saying like a grown ass man, you know, that lives at home with his mom.
Why is it always the man that lives at home with their moms?
You know, because women, a little bit, and we don't get along with our moms. That's
Right?
what, we're like, no, I'm not dealing with that. The man's like, okay.
Yeah, I'll just stay at home.
Yeah, it's free. I'll deal with you.
I'll deal with it.
Yeah, that's my kids at least. I mean, well, they don't live. They live with my mom, and they listen to her. So no, he's 22, so
Gotcha.
my oldest son. Yeah, my kid. I was like, oh no, my kids live with me. Don't get that messed up. I just don't want a grown man living with me.
Right. No. Yeah. I get it. Understood.
But that could be misconstrued a little bit. But,
But in this day and age, with it getting very expensive and people can't afford homes, there are way more
multifamily
youth. Yeah. We'll just say, I don't want to say children, but young adults who have to live with their parents because they can't afford anything.
I have people with families, the multifamilies of them.
Yeah.
I have ones that have their grown, daughter and husband with kids, and they're sharing rent because it's went up for both of them, and they're doing that to help each other, not because the other one's not capable of it, but because it helps both parties. I mean, if that's the case.
And there's home builders now that build houses within houses.
Exactly.
Yeah, I've seen those. It's the mother-in-law suite is physically attached to the house and very, very separate.
Yeah, yeah.
So yeah.
So there's so many little, but that's the whole thing is knowing those limits, and you don't have to know them. You just have to have a good agent,
right?
And that knows them and are having these conversations to make sure. Hey, what are we worried about? If your whole house burnt down, are you going to be okay? And coming from a parent who my parents lost their home.
Okay.
When I was very young, their house burnt down. So we saw firsthand how that looks and how those limits, can be bad or good. There's so many little things that you need to have a good agent to have those discussions with you. If your discussion is 5 minutes, then you've got the wrong agent.
So I've had the wrong agent.
Exactly. Yeah.
So no, okay, but on that note though, how would somebody go about? What are some questions that somebody could ask an agent to feel them out, discover, are they a good agent or not?
Well, first of all, look at their reviews. I mean, just like everything else. If you look at my reviews, I think here in Arizona, I have on Google, it's like 57 reviews. And everything says she went way above and beyond.
Okay.
I would be interested to see what you pull up on there for mine, but to
Let's
say.
do it. No,
go ahead. No, seriously. That's exactly what I would do. I mean, use mine as an example.
Okay.
It's Alicia Henson and put in Mesa or whatever. But seeing that and seeing people that say, I never knew insurance would be so interesting, or to say I learned so much during those conversations.
That's why we are having this conversation.
Exactly.
Legit, because again, you were schooling me on a ton of stuff, and I was like, you know what, this is actually really, really, really relevant information.
Yeah, if I could stay on track, if my ADD doesn't have me off in left field and staying on track, I'm usually pretty good. But I really love my people, so and knowing what's important to them is important to me, and also feeling comfortable with somebody enough to be honest about what's important to you.
60 reviews, 5-star rating.
No, thank you.
Very nice.
Thank you.
It even says Bama on it.
It does, yeah. And just seeing, like, I don't know if you can find one, but it says stuff like, if I can remember right, things like she went above beyond, or to say, and there's a lot of agents out there that do like what I do. It's just very far and few between.
Right.
Yeah.
Yeah, no. You have a 5-star rating on everything. I don't think you're below a 5.
No, I don't have anything below a 5. But those wording, even looking at a 5-star, because some people will say, "Oh, send me a 5-star review," and then people just go in there and click it.
Yeah.
But seeing those little details in there saying, hey, she went above and, to say that you learned something, or to even look to see if that you learned something.
This is a good one. Alicia's the best. She is dedicated to educating her clients on the details of their insurance policies and making sure they have the coverage they need. She has an enthusiastic personality and genuinely cares about people. If you're looking for an agent that will have your back, you found her. Now, again, this is not an advertisement for you, but this is an advertisement for great agents.
Good
this
agents.
Is an advertisement for you.
And I have other agents in my office that I love,
Gotcha.
And that are like me. And then I have other agents that are still great, good agents, but they're what I would call bubblegum agents. They do their job well. They make a lot of money, but they do a lot of quantity.
Gotcha.
Oh, and there's a lot of clients who don't want relationships. So sometimes it's not.
Agreed.
There's somebody for everybody. But the thing is those people who want that quick transaction are getting what they're paying. I mean, they're ultimately getting what they spent the time to put in there. Because if you don't take that time to say, hey, I do have a pool. I jokingly, and this might not be appropriate for anything, but I say if you have the 3 Ps, you need an umbrella policy, for better words, and that's pit bulls, pools, and puberty. Like kids through puberty, because those are high risk you can't control.
Okay.
So that's easy to say in one easy hit, but if you don't take the time to have those conversations, that's not our fault. I really don't take those clients at all.
Gotcha.
I'm like, if you don't need me. I'm not the girl for you. I'll send you to the call center, and then you could have that quick conversation with them, because that's just not the relationship I'm looking for.
Gotcha.
So having, this, I already know right away. That usually people slow down when I say that. And that's not to be mean. It's just that you don't need me to. If you don't want to care about what you're protecting, then you don't need me.
Right. Yeah, and again, you don't need you until something happens, and then you find out how underprepared you were.
Right. Yeah.
So that's, again, like, I'm going to say it again, but these are conversations that nobody has and everybody needs to have. If you own anything of value and you want to protect it, these are conversations that you need to have.
Yeah, and we were talking about, so I've learned a lot during our conversations, because it's always about growing and learning and coming from, we said it earlier, we're both born in 81. Right. Don't tell anybody, no. But
I look like I'm grandpa. It's just that my beard went gray early. So.
I'm just, boxing mine up. But, talking to my clients, I'm always like, okay, I don't know that, but I'm going to be excited to find it out, because that's just adding to my arsenal and helping me grow and be better at it. So when we were talking about, even though you don't have marriage, it just kind of brought up those conversations that I didn't even think about having, because nobody's willing to admit. Because even when people tell me, they think it's a secret. They're like, oh, I smoke weed, and I'm like, oh, they love me. They trust me. They're telling me a secret. It's legal here. I forget,
Yeah.
And I, of course, want them to tell me those things.
Right.
So that way, even especially with life insurance and with these things, we can have the conversation. So I make sure that we're covering what's important and that we're going to get the right rating for us.
Okay. So on that note, I think that's something that's really important is the fact that, you right now it's so marginalized still at the federal level. So if somebody's coming to you and saying, I want an insurance policy, but let's say they don't admit to you that they use cannabis, and then there are panels for certain, and again, stop me and fill in wherever I'm wrong. Right. I'm just guiding it. Okay. So you call you for an insurance or a life insurance policy, and there's the full underwriting one, and then not. And the not, you don't have a urine test, but the full underwriting one you do have.
Yeah, blood and depending on your age. If it's a child, of course, because there is pill forms of THC and different things. And I'm not as educated on that because, I can't take it because I'll go to sleep everywhere. But, there's different reasons to have it medically and everything else. So, with fully underwritten policies, regardless if it's simplified means no test at all. They basically run your, they'll do like more of a data run for you, like checking over what they can see on like pharmaceuticals, like what are you taking on medicine. If you get a prescription for it, they will see it.
Okay, so that right there. So that again, and I don't mean to interrupt you in any shape or form. What you just said. So your medical prescriptions, your insurance agent, the life insurance agent can get that information.
We don't see it. The underwriter sees it. Yes, because they don't like us to, if anything, of course, that we disclose. If my clients, we're really close, so they usually send me their medical records before I send them, because I want to make sure I'm looking at them and I'm going, look, we're probably going to get a different rating because you didn't disclose that to me. Okay. And that way we're kind of being frontline underwriters, not to be nefarious or, anything to where we're trying to, I just want to make sure that I'm not telling you wrong, or that things, I just hate a salesman, and I hate when people flip the script on you and tell you something different than it was. So I say, hey, this is of course contingent on the things that show. There's crazy things that can show, like bankruptcies, credit, all of those things are viewable digitally. For the most part to them, to see what are your risk levels. Because they're just evaluating your risk, how healthy are you? Gotcha. How happy are you? Really, suicide rates are a real thing. Okay. So if you just had a bankruptcy and your wife left you and you got 4 kids, I'm not gosh, do not hold this against my company. These are my opinions, and I'm not very good at PC, so anybody who doesn't like it.
That's okay.
Yeah. But, they're a business, and they're looking at your risk level. So they don't want to invest in something that is not going to be a good investment for the better part.
And I think that is very important for everybody to understand too, is that it's a business. Yeah. The insurance companies are in business to do one thing, and that's to make money.
Right, and to cover you, that company is.
That's their goods that they provide to you, but what we provide to them is money.
And your risk level dictates what you pay. Yeah. That's why people are like, oh, I didn't put my teenagers on my insurance and because it's more expensive. Well, that's because you're a higher risk at that point. And let you know, this is not me speaking, but that's called insurance fraud.
Okay.
It's insurance fraud, and if that kid has a claim, they can tell where they live. They're registered for school at that house. You're claiming them on your taxes. So do you really want to go to the RS and say, "Oh, I lied. They don't live in my house"?
Nod, wink, wink.
Yeah, no. I mean, you definitely want to take the hit here. It's only for a little while because they are a higher risk.
Right.
And that's where having an agent that is able. I'm not a broker, so I don't want to confuse that. I'm an agent that works for a company that has the ability to shop, you know, so I can look anywhere and find something that's more affordable for that risk at that time.
Okay, so what's the difference between an agent and a broker?
An agent is usually exclusive to a company, and a broker has no loyalty, I guess, to any company. And that's not in a bad way. That's just preferences. I work for Comparion, who's a Liberty Mutual company, but we have different, we're an agency, so we have ability to shop around just like a broker would. I'm going to hit this thing all over. But we have I talk too much with my hands.
I do too.
But we have the ability to shop just like a broker would, but it's only with the ones that are paired up with
Certain
our
companies.
Well, because we're one of the only companies that I know of, and there might be some out there, I don't want to say never, but that can give you a bundle discount between you just being with our agency. We can give you the bundle discount with, like, hey, you might have your auto here, and you might have your car, your home here, and your umbrella here, but we can still give you discounts among these companies, and you can still get that bundle discount. Where with brokers and with independent, you can't get them unless you have them all with the same company.
And you would be paying with what you are, because you guys work with you're an agent that works with multiple companies under one company.
Right.
Is that kind of a good?
Yeah.
But you're only making one payment. You're not making a payment to here and a payment to there and a payment to here and a
Depends
payment
on
to
what
there.
we choose.
Okay.
You know, like you, for your policy, we are. You know, you have your life insurance policy, and then you have your umbrella. To me, I tell people, hey, it's cheaper this way. It's up to you how we do it.
Gotcha.
But no, if you're going with different companies, there's no way to combine it. I mean, there's just no way around that.
Okay.
But that's our choice to make together when we're having this discussion. And most people's homeowners insurance is going escrow anyway. It gets paid out of their mortgage.
Right.
So usually it's just the auto, and then if they have something to lose, if they own that house, then we have an umbrella, and then whatever life insurance. Of course, all these companies are kind of exclusive to themselves when they come to payment. They don't want to mix. They don't want us touching their money.
Gotcha.
And I don't get paid. A lot of people will confuse that too. They'll say, "Oh, so how much do I have to pay for you to handle my stuff?" I'm like, no, it's I get paid like the call center gets. It's the same thing. They have to pay somebody, an agent. We're licensed, so it doesn't matter if it's the call center or whatever. We all get the same percent. It doesn't matter either way. So they're not having to pay me like $100 fee for being a consultant or something. That's not how it works. But that would be, I believe, illegal. Oh, well, I think as long as you let them know that they're paying a fee, you can do that for some places. But I would never. But with me, I'm only referral only. So I don't take new clients unless they're referred to me or unless they contact me directly and things like that.
Well, the Arizona Grow team is going to now be referred to you. So we're going to talk about cannabis grows and all that type of stuff.
Right.
But so yeah, we're just going to say, I got it from Blue to Green, and it's
they use your name. They can use your name because you're my client, and they use their name, and then that's your referral.
I get zero anything on it. I don't get a
I'm
percentage.
Saying, but I'm referral only, so you have to be a current client, sent from a current client, or from one of my companies, or Barrett Jackson, or from one of the companies that. Not saying but I'm saying if somebody that uses me.
We don't need to tell them that you're giving me a kickback.
Oh.
We don't need to tell them that.
Yeah, wish. I wish too. I wish I had that kind of
fun. Grifting at its finest.
No, but your question though about life insurance is that there's multiple policies. There's no urinalysis or blood needed on a simplified issue, but your risk will still be evaluated through means that aren't physical. The cost is more when you do that.
Okay.
So it's just a matter of what you're comfortable with, simplified issue is that's what we're speaking about with my company, of course. And then fully underwritten, that's what they call it for all companies, is going to be a lower rate for your class, I guess, because they're going to know exactly what you got going on. But you're also putting yourself up for denial. And
I was just going to ask though, so if something pops up on that though, then you can be denied.
You could be denied for any of it. I mean,
Okay.
even I've had people that were denied. I mean, like, sadly, I tell people with certain autism diagnosis, you know,
okay.
for children, I tell people if they've got babies, insure them now. You know, because of the fact that your children can be denied.
Interesting.
Once they become diagnosed with something,
Okay.
the cheap children can be insured at 15 days old
Okay.
with life insurance. If you insure them then and you put something called an guaranteed insurability rider on it, they can't be denied
Okay.
in the future for up to a certain age. So I tell people, if you have that in your family, if you have autism, if you have diabetes, like youth, what is it called? I'm going to go blank now that I'm on camera, but to where you're youthful and you get oh man, why am I going blank? But the diabetes, you get diagnosed with the juvenile diabetes.
Okay.
Gosh, I was going blank there. But if you have all those things that run in your family, get them insurance. Why nothing's on the record. They're clean. They have a clean bill of health.
I think one thing to also delineate too is you're not insuring them to get the money to party.
No.
You're insuring them, God forbid something happens, to pay for expenses.
Right, because we're all going to die.
We are. We're all gonna die.
I mean, I'm not morbid, but I have to think about these
Absolutely.
things constantly. I have to think about the worst case scenario for everybody. And I'm surprised I'm so upbeat because most of the things I have to think about are morbid. But yeah, ultimately, another thing is like I have insurance on my kids as an investment because there's different policies out there that are great investments for your kids, and they can use that for a wedding, you know, for their first car, their cars, or they're not really like. Because, you could use it that way, but most people gift it to their kids and say, here, this could be adult life in policy, or you can cash it out and use it to buy toward your down payment on your first house.
So are you talking about a full cash value policy?
Mm-hmm. A whole life policy.
Whole life policy. Yeah. Mm-hmm. That's what sparked this whole thing, is to call you and go through my rates. And it's so funny because ever since that, you and I had a conversation a couple weeks ago or whatever it was, I've seen advertisements on TV for this.
Yeah.
And I'm watching the advertisement and I'm going, that doesn't explain anything. No. Nobody has any freaking idea what that means, because I had my previous agent and you explaining it, and I'm still like, what does this mean? I get it now, or I have a general understanding of it. Mm-hmm. But if you could, like, kind of explain, like, how can somebody use a life insurance policy to buy a car? You know what I'm saying? Like, that doesn't make sense. But
there's so many things so the younger you, of course, the longer it has to grow.
Right.
So it's just like it. Life insurance isn't an investment. It's a protection, of course. So I want to make that very, very, very clear. Investments can be used for, like, your IRAs and your different things like that. So it's not there to make you money. But in, like, you remember the Gerber life policies back in the day?
Yeah.
And I'm not saying, I'm not repping them or dissing them. I'm just saying those were a big thing because they would say on their for your college fund, for this, for that. People don't really remember that. But that's exactly what they are. So I'll give you an example of my own children's policies. I actually, when I first started doing this, I got my kids something called a 20-year paid up life insurance policy. And what that is that means you pay for 20 years, and then at 20 years, they're paid off. You don't have to pay another dime, and it keeps building cash value. Okay?
Do you have to, after that 20 years, you do not have to continue to make monthly payments on it?
No. It's paid for, but it's going to be a higher payment. So I paid more. I paid like $40 for a little. I mean, it wasn't a huge policy that I had for them. I think it was $25,000. Enough, of course, a burial policy, or if something were to happen, God forbid, nothing's worse than losing your child except for going in debt doing so.
Right.
That's even worse.
We have to talk about money. It's a shitty thing, but it's the reality.
You have to pay, and they're going to pull on your heartstrings when you go there. So it can be used for that, of course, because it's a life insurance policy, but it can also build cash value as far as at some point you could either hand it over because it's a whole life. It lasts until they're 100.
Yeah. Okay. So that's what the term whole life means.
Whole life.
It's for that person's whole life.
Yeah. And people, you have to be very careful because as you've experienced, you could think you have a whole life and you might have a universal policy, or you might have this kind of policy that is considered a whole
term
life.
Or whatever it is.
A term is a term. It has a term. It has an end date. And then whole life is supposed to be for your whole life. And then you have universal. And then that's where it gets a little confusing, I guess. But if you have a good agent, then y'all have a plan set up to where you're going to, that's going to fit your needs. So some people use a universal policy in place of they'll pay double the price that they would for term. but they could get all their money back. They can get a guaranteed return of premium. So all the money you put into it at 20 years, you can get every dollar back.
And that's something to delineate too. See, I hit these things all the time. That's something also is that you don't put money in and immediately get it back.
No.
You're paying for 20 years. It's a 20 year. Is 20 years pretty much the standard number?
No. That's a 20-year paid up. Is just saying it gains cash value before that, but that's when it's finished paying for. But a lot of people, especially parents, don't want to pay for that for the rest of their life. So they're like, hey, here, this is paid for. If you want to add on to it, you can.
Okay.
But this is my gift to you. If you want to cash it out or if you want to do whatever with it, it's your choice. But I bought this for you. A lot of grandparents buy it for presents.
Okay.
Things like that, just because it's multifaceted at that point. It can be used for life. They can use it. They can convert it. They can do whatever they want to when they become an adult. But you got a 20-year-old, a baby, you're only paying like $40 for it. I mean, when they turn older, they're going to pay more. So it's kind of locking in that amount for them and also giving them options,
So, let's say day one baby is born. I get a $50,000 whole life policy.
On day 15.
On day 15. So on day 15, I get a whole life policy. Do me a favor, make sure that that's in front of you.
Oh, sorry.
There you go.
Go ahead.
Beautiful. Day 15, you get a whole life policy. So you pay for it for 20 years. And let's use a big round number, $100,000. So day 15, you pay on it for 20 years. 20 years and 15 days, it is now paid for. So at the end of that 15 year or 20 years, you can give this whole life policy to now 20-year-old child.
You can give them to them at 18. You can give them to them anytime. But you're still going to pay on it for 20 years. Yeah.
So it will not be worth the whole $100,000 until that 20-year mark is paid off.
No, it's not worth. It's not that they have $100,000 life insurance policy on them.
Okay.
At that point.
Okay, but that's not necessarily the full cash value.
Exactly.
Okay.
It's going to grow. And there's ways there's some different, not a 20-year paid up. So there's so many different things that we could talk for hours.
Understood.
I'd be over here like,
Understood.
Oh, baby, let me tell you about this. No, but seriously, it just depends on when they're young, it does grow really nicely. It's definitely has more cash value than other ones when they're youthful. It depends on the age you get them. There's so many variables. Boys cost more. Yeah, there's so many options. But like for my kids, when I first set up, I was like, oh, this is safe. This is what I want. Okay. And to tell you the truth, like just recently, I just changed my kids over because I learned I don't want to say I got better at that part of it as far as knowing how I can pay that same payment and actually have a better cash value with different products. Okay. So I end up changing it over to something called an indexed UL, which is a universal policy that anyway, but it's a long story short, my kids will have more value in that policy and I'm paying almost the same. Okay. So let's say that, so at that 20 years, you gift that to them and it's the life insurance amount is worth $100,000. But what would a general full cash value be? Maybe $50,000, $80,000? Does it depend? It's so many variables. Okay. So many variables. It depends on how much we're putting in it, if we're overfunding it. I mean, there's so many things that are not even we would definitely have to come back for a conversation for that. But I mean, usually I'd have to pull up my son's policy and see. I want to say, big round number, 50? No, it wouldn't be that high yet. Okay. It's not going to be that high yet because you're thinking about how much, but you're thinking you put in $40 a month. This ain't a big, so it all goes about how much you're putting in it. Okay. So if I would have done it differently and had it, my policy was only $25,000 for $40. So you can imagine the price is higher. Understood. When it's that. So of course, with a $100,000 policy, you could probably easily have $50,000 in it because you're putting so much more into it. So and that's the point I'm getting to is that the person gets the life insurance policy. They have a cash value of that policy. So now let's say they're now 25 years old. They've met the love of their life and they want to get married and they want to pay for a wedding. They can take the cash out of that of what it's worth and then use it to pay for the wedding and the honeymoon and all the stuff that goes with it. And they don't have to pay it back because it's not a loan. It's their money, and that's the cash value. Well, it depends on what you want. If you want to keep the policy or not. If you want to cash it out, then you're right. To cash it out, and you won't have a life and policy. You'll be giving that up. If you cash it out completely, you're surrendering it. Okay. At that point, which is fine. Some people do that because some people we've got to make sure to hit on life insurance through work, because that's a big, huge thing that people do wrong is they'll cash out their thing because they're like, oh, I have it through work.
Oh, okay.
That is not, your work policy is not dependable.
Okay.
At all. Because if you get sick, if you get COVID and you go on short-term disability.
Oh, you said the C word. We're going to get canceled.
Oh,
now.
that's it.
I'm
okay.
just kidding.
No.
Yeah,
But
just turn it off. We're done. No, I'm just kidding.
Make sure, bleep, bleep. But no, I mean, they're not going to, anything that has stipulations. So don't ever, you always need your own. Do you trust your work to pay your wife? If you die, you can't. It's because there's so many variables to that.
Right.
So you need to
They're
own
gonna
your
find
own individual.
anything to not pay it.
Well, if you're on short-term disability, you're not part of the group anymore.
Okay.
And it's a group policy. Yeah.
And the whole thing is that there's so much nuance to all of this. There's
all of it.
So much to it.
That's a fact across the world. Though.
Yeah.
That's fact. And HR directors are supposed to tell you when you do your HR setup, this is not a personal policy. This is a group policy through your work. It's not meant to be your only policy. That's why it costs $2.
And
it's meant to be an extra.
And that's the thing, though, is like my previous employer, I was with them for 11 years. And I had insurance policies on all my kids and my family and all that good stuff. That was never explained. None of this was.
And do you have it now? That's the question.
Well, I don't work now.
Well, I'm saying though, that's what I'm saying is you can't take it with you.
Right.
It's
right.
not,
Right.
And it's always the older you get, the more expensive it gets.
Right.
So that's why I'm like, why wouldn't you lock it in? I have 20-year-olds tell me it's funny because in the day, I have a 20-something-year-old tell me I don't need life insurance. I'm like, oh, you're not going to die. I need that secret, and and then I have 60-year-old people calling me or 65-year-old people that calling me that they're retiring and they're going, I'm going to have to fit it in my budget.
Yeah.
They're paying $300 or $400 for something that they could have got that I just offered to that kid a minute ago for $25.
And again, youth is wasted on the youth, and I don't mean that in a bad way, but we don't think about these things when we're young.
No.
You're living your life and partying and having a good time and all that good stuff. You're not thinking about dying or, hey, I can get a full cash value thing for $40 a month, and then in 20 years, I can put that as a down payment on a bigger house or a newer car or whatever the case is.
I have some really smart I got a few that'll come to me that are like, hey, I've read this book, and it talks about being your own bank and doing all this kind of stuff, which I don't promote it. I'm not saying that, but it's a way to kind of and they'll come to me and say, hey, I got $350. I need both, and then that way they can borrow against it. Because some of these policies you can borrow once it builds, which takes years.
Right.
Once they hit 35, 40, they can pull 90% out of it, and they can pay themselves interest.
And they can pay themselves back. They can pay themselves interest back.
And then they can keep that life insurance policy.
They'll still have. I was just gonna say they're still gonna have a life insurance policy, and then it's gonna continue to grow its own cash back. And then let's say at 60 years old they want to retire and they want to go buy whatever, then they can cash that out.
If they've prepaid their funeral, they don't need it.
Now.
I'm just saying there's people who do that. And if your house is paid for, but a lot of people will do it too to keep their wealth away from, making sure that their family gets money right away. Because it takes a lot of time for the estate to liquidate the assets.
And arbitration and all that crap.
Exactly. So the life insurance policy is usually set up even for people who have a lot of money, to make sure that the estate gets that untaxed money, and that they have it to pay the funeral off right away, and that somebody doesn't have to sell something to pay for the basic stuff.
For the record, and my wife and I have talked about this, when either of us passes, bury us in the backyard, plant the tree, whatever the case is. We don't need a $50,000 wedding. You know what I mean?
Yeah.
Don't go bankrupt to bury my dead ass.
Yeah.
Have a little group together, smoke a joint, and move on with your day.
My husband wants a funeral pyre. That's what he told me. He was like, I want a Viking, a funeral pyre. And I said, it's illegal. He says, well, I don't care. I'm dead. And I said, I'm going to go to prison. He's like, you'll be old. Nobody will put you in prison. I'm like, okay, Clay. I was like, well, let's pretend I did it. Okay. So
I'll take care of it.
Oh, yes. I got you, baby. You will go out in Viking history. Valhalla will be happy to get you. Okay. Here we go.
Funny.
But yeah, I mean, when it comes, so we were talking about life insurance. Let's hit the marijuana kind of side. So I did some great little research and stuff like that. So the back in the day before it was legalized, it counted just like smoking, like nicotine. Okay. So that I know of. That, again, I don't speak for all companies. I speak for what I know and what I've dealt with personally. So don't hold it against me that every company did it
They're
that way.
coming for you if you're
Oh,
wrong.
I'm sure. I'm only waiting for this one. But the biggest thing is knowing that for marijuana, as far as now goes in a legal state, so it goes by, of course, your all of your jurisdictions and states and everything. Like, if it's legal there, then recreational use, which some depends on who the underwriter is and the company and different things like that. But let's just say not like once, twice a year, 3 times a year, whatever you want to say, just an occasional user, you can get the best rating possible if everything else is good.
Okay.
And then you go to more than 12 times a month. More than 12 times a month. And then that would give you another rating.
Okay.
Which is going to be like preferred, so again, different for every company. And then the next level down would be your standard, rating. And that's above smoker.
Okay.
So that would be if you're doing it more than that 12. I think I wrote it down. They have, and again, different companies, it'd be about you talking to your agent. It's like 12 to 16 days. You pretty much get standard tobacco.
Okay.
Like you're a smoker. And also mentioning that if edibles and like if you do it 12 to 16 times a month and it's not inhaled.
Okay.
Well, you can do vape.
Right.
Or edible or pill form, I believe they said. Like I said, I'm not as savvy and all that. But you could get standard non-tobacco.
Okay.
If you're ingesting it versus smoking it, inhaling it.
So ingesting it through your stomach is better regarding insurance than it is through inhaling it through your lungs.
Because of the risk of other like breakdowns from like inhaling anything.
So they just haven't simply caught up to the research yet that shows that cannabis users don't get lung cancer. They haven't caught up
and
to
they're
that,
not even looking
to
at
that
lung
science
cancer.
yet.
They're looking at other things that could be, I think like more like burning your face
okay.
catching your on fire
Okay.
or burning, like dying from passing out with it.
Gotcha.
Things like that. I don't think they're really looking at it from them, but it is being reevaluated. So that is something that once it goes federal and you have DOT and everything else and it's not affecting it, there's going to be a whole different, it's going to be a different ball game there. I don't know that for a fact, but that's what I've been, read about and stuff like that.
So that's the question though. I mean, if it's still federally illegal and somebody is an open cannabis consumer and all that type of stuff and they something happens, they pass, whatever. I mean, that's not going to affect the payout on their insurance or anything like that.
Nope. Actually, most insurance companies, believe it or not, have a 2-year look-back period. So if your policy is over 2 years old, if you commit suicide and I'm not responsible to that, but this is open, like available online, so I'm not telling any secrets, but most people don't know that. But if anything happens after that 2-year mark, I mean, it doesn't matter. It doesn't matter, but I mean, they could always investigate it. They could do things to say that, again, insurance fraud, things like that. But truly, I mean, that's usually the look back period for this state and for most insurances for life insurance.
I do remember when I got my policy many, many years ago, they said you can't commit suicide for 2 years. I'm like going, I don't plan on it.
Yeah.
So that's a little bit of a morbid thought, but yeah.
Yeah, but I mean, a lot of people are under the assumption that it doesn't cover it, and things like that. And they're trying to do their due diligence to weed out those risks because ultimately it affects everybody when you have more payouts that aren't, when enough payouts aren't put in to handle the payouts.
Right.
And that's a problem.
Well, I mean, I vaguely remember, and I'm just going strictly off of just memory here. Like I remember when Hurricane Katrina hit. I mean, that bankrupted several companies because they just couldn't afford to pay for everything.
Yeah.
They just don't have
too
the
many
money.
losses at one time.
Yeah, there you go. From a catastrophic event or something.
Exactly,
like that.
right. And you have a lot of, there's so many different, oh man, like I said, and this is where it comes in. People have asked me to do podcasts on different topics because there's so many things to cover. I mean, we've probably went way over your time that you usually do one.
Oh, no, we have unlimited time. Don't even worry about it.
Right, yeah, I know, but somebody's going to be like, click after about 15 minutes of this. No, but hopefully I'm giving people information that they don't know. But yeah, that's the thing is knowing ultimately what's going to be covered and how it works, every policy. So the basic subject for this whole discussion is knowing the limits, knowing, having discussions and being open and honest, but ultimately federal level doesn't count for all of the insurance because everything stays specific. Your auto, if you live in Ohio
Valid
and you
point,
have Arizona, you have to follow Arizona's limitations for auto insurance. Same thing for home because you have different risk in areas like here, I've never seen as many Teslas as I have in my life.
Here in Arizona?
Oh gosh, yes.
Really?
No, yeah, I lived in Ohio. I seen one. And my sister's in Alabama, and hers is the sole Tesla in her neighborhood. You know, she has two, and they were like, oh, they're actually touching it, and they're like, oh my God, it's a space car. You know, I mean, not saying all of Alabama's like that, but she works in Birmingham, and there's none.
It is Alabama.
Yeah,
I've been there.
Yeah,
so.
no horse and buggies, or no, you know, but it's just funny that way. It's the risk level in different places, you
Gotcha.
know. So that's why people are, oh, I moved from Oregon or I moved from Colorado. Man, insurance is higher. Well, if you moved in the middle of Mesa and you've got a lot of accidents happen or a lot of thefts, or that risk level is monitored.
This is going to be very unpopular, what I'm about to say, but it's something that I dealt with on a regular basis when I was in law enforcement. The amount of non-insured, non-licensed drivers in the state of Arizona is astronomical.
Yeah.
And I'm sorry, but if you're not from the United States and you don't have citizenship, you're not going to have those things.
Yeah, no, you can get it. You can.
Right.
You can get insurance. Oh, well, okay.
But
yes.
they
They have access. But I think a lot of people are also misinformed that if you're not, that you
Valid
can't.
point. And again, this is not a race thing or anything like that.
I mean, my kids are Hispanic. I mean, so I'm definitely not taking it that way. I'm just saying that a lot of people are misinformed too.
It comes from a place of ignorance simply because of not knowing.
Exactly.
And the amount of non-insured, not underinsured, non-insured drivers was, I mean, that was, you know, let's say I made 10 stops in a night, I could say that probably 30 to 40% of my traffic stops would be people who did not have any insurance.
Right, yeah.
In any way, shape, or form.
Yeah, and what's really crazy about that is, like, if you have liability, people have, say on your insurance policy in Arizona, it says UIM, underinsured, and uninsured, right? So people are like, oh, I've got that on my policy. They'll just have liability and then they'll have uninsured under. That's for medical.
Right.
It's uninsured medical. So that means if you're hit by uninsured, it'll cover your medical bills. But in the state of Arizona, if you don't have full coverage, which is just, when I say full coverage loosely, that just means comp and collision, then it will not cover your property.
So
that's all your property.
We were rear-ended in 2014 in my excursion at 75 miles an hour. And what I learned from that was that this is something that you and I didn't even discuss, is that, but what I learned was that because we had full coverage, I had uninsured. The guy who hit us in the HOV lane when he shouldn't have been doing 85 miles an hour, he hit us because I picked up speed because I saw him coming. He hit us at 75 miles an hour. No license, no registration, no insurance. And he was an American citizen. He just didn't have any of those things. I learned that I was actually able to get money from my uninsured, underinsured policy because my uninsured, underinsured kind of pretended to be the other insurance.
No, that's exactly what it's for. It acts, but that also counts against you a little bit on your claim history.
Okay.
But it's still, no,
See,
that's what it's there
that.
for. I mean, it's not as hard of a hit as like an at-fault accident.
Okay.
But it does hit you because you've asked your insurance to take the place of that person.
And they awarded us a decent chunk.
Oh, yeah.
I mean, it wasn't like $100,000 or anything like
Right,
that, but
yeah.
it was a decent chunk of change that paid for some things. And we were going to chiropractor appointments every other day and all that, so it just kind of helped with the cost of that.
Exactly.
But that is something that I don't know if I did not know this was the thing. And when I had contacted the insurance and all that, my agent was on the line with me when I was explaining to the corporate center what was happening, this and that, and then he hung up the phone and then he called me personally and he explained, hey, you're allowed to do this.
Okay.
It's like, okay, great. What do I have to do? And
Right.
then he walked me through the process of doing that.
Right. Yeah. And I encourage my clients, hey, if you need it, if it's there and it's going to find it, and I'll say this, I try to make this is the easiest way I can explain insurance, what I do. My job is not to make you rich. My job is to keep you whole.
Right.
If something bad happens, to bring you back exactly where you were in the beginning, not no more, not no less.
Nice.
And if we need to do the claim on our own insurance, as long as I'm educating on how it's going to affect us financially that next year, and you're not gonna be mad at me for not telling you, then I mean, if you're doing a $1,000 claim and it ends up making your rate go up $200 a year for 5 years, well,
Right.
Might not be the best.
That was not a good idea.
That's not a good idea. But that's our discussion to have. And I mean, people will call me to service their policy. I'm not there to service your policy. Not saying that badly. It's just, if I'm servicing if I'm adding a car on your policy, I'm not answering the calls when you're hurt in an accident.
Right.
I'm there to be the expert when your renewals come in and you want me to get the rate lower, but also to keep you protected or to make. I mean, I'm not saying I can't service the policy. It's just if with
not your function.
with 600 clients. it's very hard to, you can't be all of that.
Yeah.
And we're not paid to do that. That we have different centers that handle those service things so that we can focus on advising our clients correctly.
Yeah, no, that makes sense.
Yeah.
That makes total sense.
Yeah, but I hear people say, "Oh, well, my agent doesn't." I answer all the time, but I'll also redirect you for some things, because there is going to be a time come, because that's always came for all of my clients, where you're going to need my advice, and I'm going to make sure I'm not on the phone with little stuff that could have been handled on an app.
Right,
you know, things like that. But yeah, I mean, it's, you know, as far as that goes, I forgot where I'm like, okay, where do we leave off at? But as far as where were we at? Jesus.
It was regarding the uninsured, underinsured.
Oh, yeah. Just knowing those limits and making sure that you're good there. And that a big one I see here in everybody's got an ATV.
Mm-hmm.
Okay.
The side-by-sides. Are you talking side-by-sides?
Yes.
Okay.
Yeah. ATV, any kind of, razors and things like, I always say Polaris or something, whatever.
Polaris.
Yeah. I was joking. They're going, what is it, Bam? I'm like, ooh, hold on. But you could tell I wasn't, we had 4-wheelers, and that was it, where I was at hunting and stuff. But on those, I see a lot of people who will just get the minimum on those, and it's so crazy to me.
That's a terrible idea.
Oh my gosh, that's the worst.
They roll all the time.
I had and this wasn't my client. This is somebody I got after, you know, so this isn't something that where I gave them this coverage, but they came from another place, and they had state minimums on they're like, oh, I paid $100 a year. I bet you did. I bet you did, you know, but the girlfriend was hurt in their side by side, and she had like almost like her leg ripped off pretty much, and it was like down one of the little canyons, and they were going down like a little waterfall thing, and it basically like caught her leg, because like her foot was on the outside, and it kind of like ripped it. But she was in wound care, and she had all this stuff, and she had insurance, but it wouldn't cover anything cosmetic.
Okay.
So a lot of those things are considered cosmetic, you know. I mean, yeah, my boob job might be cosmetic, but if I got it ripped off into something, I want it back.
That's medical.
It's not medical to them. But under your auto insurance, it is covered.
Okay.
But on your medical, it's not, because it's not medically necessary.
Gotcha.
Do you see what I'm saying? So that's when people go, oh, I got insurance. Well, for the things that are cosmetic are not medically necessary, that's when you're going to want to use your medical on your auto policy. But for that ATV thing, I just side by sides and all that, I see you should have $500,000.
Okay.
Because the fact that girlfriend was given $25,000, what do you think that did for her?
Nothing.
No, absolutely nothing.
That's not even, that won't even cover the cost of a medical flight out.
Mm-mm. No, it's like it's what on average $35,000 for a flight out.
So I can tell you this, Arizona is a ripoff when it comes to medical flights. Mm-hmm. So I'm going to plug my previous agency. DPS Ranger is tax-based, and it's free. So if you're ever out stuff and you need a medical flight, request DPS Ranger, because they're not going to send you a bill. Yeah. But I know that if some companies, it went for like the Life Flight, Native Air, PHI, whatever it's called. Mm-hmm. If the crew goes to the helicopter and they turn it on, you're getting a bill for $8,000 minimum. Yeah. If they fly to you, you're looking at a minimum of $13,000 to $15,000.
Don't get an IV.
Gosh. No, nothing. Yeah, but you're looking at so real quick story. My son had an issue. He swallowed a ginormous coin. Mm-hmm. I needed to fly him down here from Sholo to fly him down here on a Native Air flight. The friends and family discount was going to be $13,000. DPS Ranger did it for free. Now, granted, this is back when I was an officer and all that good stuff. Right.
So, yeah.
But at the same time,
it's great to know, though. I mean, to know that you can get it like different. I mean, shoot, even knowing that you got rural metro in some areas, some people don't know that.
Right.
I mean, that's a secret to some people, which is crazy. Yeah.
Here, living out here on a county island, all we have is rural metro. Yeah. We don't have a tax-based fire system.
Most insurances, and they won't take it if that's. You have to pay it in order to have insurance on almost everybody. Yes. All the companies I deal with, they want proof of rural metro.
You have to have proof that you have the fire coverage.
Exactly.
And there's been stories out here, kind of out in the Florence area and all that, where it's, well, is this Queen Creek, is this Florence, or is this rural metro? And they've watched a house burn. Oh. You know, that stuff like that.
But if you're subscribed, baby, you've covered.
You're good.
You're good.
They're coming. They're going to come out and hose it all down for you.
Exactly. So it's just little caveats, like you said, about knowing those kind of things and knowing, about the fire. There's little things that, again, your local agent, and even me, I've lived in Ohio, I've lived in all these places. I know about those little things in most of those areas. So, I mean, having somebody that knows your area too is also really important, because they're going to know what you're like here. If you talk to an agent, unless they lived here, in Ohio, and you said, "Oh, I don't need glass cover." Oh, you don't need glass coverage.
In Arizona?
Right?
Damn
you
well better
obviously
have it.
I've already lost 4 windshields
Oh, yeah.
this year.
Oh, yeah.
I mean, I have a Jeep Wrangler, so those things are flat. But that's where it's having somebody that knows your area, regardless if they live here or not. Because I do handle a lot of people in Ohio and Alabama and all that kind of stuff. But knowing that knows your area and knows what you need and knows little secrets like that. I'll tell you, I don't know if you have a bunch of viewers from Mesa, but their water companies offer like, I try to tell everybody I talk to that lives in Mesa. I'm like, hey, you got Mesa water? You know, whatever. They're like, yeah, I do. And I'm like, okay, they got an endorsement that's really great on there.
Interesting.
And it's like service lines. And so all your service lines under the ground, if like the cactus or trees grow into it, it's a service line endorsement. It's what you pay for on your regular insurance.
Okay.
But they offer it for like $5, and they have one that's for outside the home and one for inside. So even if the pipes, if something happens that's due to those outlines, it'll pay up to like $10,000, $15,000. And I've had people use it, and there's no deductible, and it doesn't go on your insurance history, so it doesn't count as a claim.
Interesting.
So anything I can do to almost put things away from the insurance and save the people money, I'm always like, oh, well, here's a little secret. Let's do it this way. We're going to pay them. But if it's just like jewelry, I don't want people putting their jewelry on their home policy.
Okay.
Because if you lose your stone on vacation, I want you to be able to get it covered. So I'll put them with like, a company. I was about to say it too. I'm going to put it with our one of our partners that handles just jewelry, and then that claim isn't going to go against them.
So you can individually insure.
Exactly.
Gotcha.
Yeah. And that's one of the things that I think I want to make sure to hit on is that knowing your limits on your policy. So everything for theft on every policy known to man, everybody has a limit. Every company has their different limits and stuff like that. But like the guidelines are usually like if you have $500 cash in the house and it burns, or if I'm just saying it's different for. I don't think I've ever seen one that's over like $1,000 in cash.
Okay.
But if you have that, it's not going to be covered anything over that.
Interesting.
So which that's going to, because people are going to be like, I had $1 million in my under my mattress.
No, you didn't.
Yeah, exactly.
No, you didn't.
Do you got proof?
You're 22 and live at home and work at Burger King. You don't have $1 million.
Exactly. I mean, some of my older clients might have some stuff in their mattresses, but they put it in the cans like everybody else, like out in their yard or something.
Put it in the if
In
you
my
don't cook,
house.
use the oven.
Yeah. Look, then that'll help you out a little bit, right? Gun safe. Well, the same thing. So jewelry has a limit. She's like $1,500, and I'm not giving you exact. I'd say contact your agent or look at your policy. Every policy, if you open up what we call the declaration page, and it on part of that, not the declaration page, but the contract that's attached to that declaration page is going to have the limitations on your policy.
Okay.
And if you have an agent that you can just go over it with, that'd be great. But jewelry, guns for your all your military and all the police officers, it's a limitation on that always. It's usually like about 2,500 on limits on guns.
That's nothing.
Nothing. I mean, my husband, I don't want to let him know, but he has a lot, like collects a lot. He's a veteran, and he has a lot, way more. We have to insure them. I have to add those on my home policy because they don't really offer. I'll have to check into it and see if they had a separate one. None that I could find at that time when we did our policy. But so guns, cash, jewelry, surprisingly like record collections, golf equipment, even like e-bikes.
So now here's a stupid question that's speaking on what we covered. There's some glass, and when I say glass, I'm talking about bongs, marijuana smoking utensils.
Yeah.
That are really, really, really expensive.
Paraphernalia, yeah.
Could those be insured?
Yes. So anything, so all the stuff we're talking about right now is called personal property.
Okay.
Now with that kind of stuff, unless it was a collector, it should be covered just fully under personal property. So I did have a client, and this isn't like, he had a bunch of vape equipment, and I want to say $15,000.
Oh, that's
almost.
nothing.
I mean,
it's easy.
Yeah, so he had a bunch of different apparatuses, and he had all this, and he actually had a renter's policy, and he was moving into his new place, and it was stolen. Ooh. It had it out the back of the car. He had his box with all this stuff in it, and and it could have very well been bought. It would have been the same. But he had all of that stolen, snatched out of there. He went back. He was like, shit, and so he called me. He's like, Bama. I'm like, you got a $500 deductible on your renter's policy. Just know we're going to be affected for the next claim. With $15,000, there's no question. It is what it is. If it was $2,000 and you had $1,000 deductible, I'd be like, You're
just going to have to eat that one.
Yeah. Well, and that's up to the client, not me. I tell people, my disclaimer all the time is, my job is not to tell you what to do. My job is to educate you and let you make your decision on your own.
Gotcha.
That's my job. But yeah, he said, my company my main company, he was like, they paid. I sent over the receipts I contacted my store.
Nice.
They gave me receipts from where I had purchased it, because you know how a lot of those stores have. They were going to pay him anyway, but they wouldn't have paid him that full amount.
Understood.
Yeah, but they paid him out 100%. He paid only $500, so he made but he got $14,500 back to replace his stuff. And like I said, it wasn't making him better. It just replaced it and brought him whole again. That's the whole the whole topic of this is to make sure that we're bringing you whole and we're not. So the same thing with, I think I even brought it up. It was saying something about, so I contacted a bunch of my companies before I came over, and I was like, okay, what would we do with trees, and what would we do with these kind of things? And with this topic being such a new, not new, but being new in the guise of insurance, it was kind of funny to see people go, oh, let me look at this policy and let me see what we got.
When you contacted these people, had they ever had these questions?
No.
So
never.
This is a whole new world.
Yeah, and even for me, I'm not even going to be like, oh, I know everything. No, I was like, oh, man, this is a great question. Because whenever I get them, I'm like, super excited because, I've been doing this a while. And sometimes you're not stumped very often.
Right.
So it's not always good, especially if I'd rather be stumped now.
Yeah, as opposed to when an issue comes up.
And I was like, dang, I feel bad. I didn't tell you. Because I didn't know,
And I could see people just being flat out scared to admit the fact that they have grow equipment. I mean, again,
it still feels taboo.
Oh, yeah. And I know nothing about growing. That is not my specialty. But I do know that even for in-home grows, you could have thousands and thousands of dollars worth of equipment.
And as long as it's not a business, because that's not illegal here anyway.
Correct,
you would have to have a commercial license. But if it's under, I think ours is 12 plants in this state. In Arizona,
Correct.
It's total. It's like 6 per person. Is that right? Or is it 12 max? Something like that. I can't remember.
That you're correct.
Yeah. And most of Colorado, I think. So it goes by your state jurisdiction as long as you're staying legal, and they will replace those plants up to the limit of your policy. That's where the caveat is.
Okay.
So on most policies, they'll do like 500 per plant for up to a certain limit.
Okay.
Or 500. But again, that would be a conversation where you're going, hey, agent, because I have some people who have $1,000 cigar, like those cactuses that are expensive.
Okay.
If their house burns and it falls onto that cactus, they need to have enough.
Yeah, that's interesting. Yeah.
To pay for that too. So there's different ways we can go with companies that have more coverage for maybe there's like levels, and they'll say, oh, it'll cover more plants or it'll cover more landscaping, things like that. But the same thing, just making from everybody I talked to for my companies, it fell under plants.
Okay.
It didn't fall under like marijuana. It fell under plants and it just fell that way.
It is a plant.
It is a plant.
It is a plant.
Yes, but so it didn't have any exclusions is what I mean. So because of it being what it is. As long as it was legal in that state, it was considered a plant.
Okay.
But knowing those limitations and stuff like that, another thing was that I read online that people were that anything like harvest buds, extracts, edibles, paraphernalia, things like that would be covered under personal property on your renter's policy or on your homeowner's policy.
Okay.
So you would just want to make sure that those limitations are, high enough.
And when you say limitations, you mean like not $1,000, but maybe $15,000 or $20,000 or something more to cover the cost of all that equipment and stuff.
I have some people, like I said, I've got some people that even live with their parents and stuff, and they're like, hey, I don't need $100,000 in coverage. You can get a $5,000 policy for $60 a year. Okay. And that's with $100,000 in liability and all this stuff. So they'll say, oh, well, I don't care about my clothes. Right. Well, I've got one guy that's got like 20 grand in shoe collection. And so he's just like, I don't care about anything else, but I want my shoes covered. And I say, hey, if you don't care about your clothes, then I don't care about your clothes. As long as you're not mad at me when you call me at midnight if something burns out. That's my whole thought process, I guess, is if you're not mad about it, I'm not mad about it. I'm not there it's dollars for me. I don't care. Right. But you being upset with me isn't good for me. So
now, what about people who have a grow and let's say, I know I follow several people on social media that are doing these really, really cool grows that own property, and then they have an exterior structure that they have totally made into a grow. Would that structure in and of itself need its own policy, or is that covered under homeowners? That's
a great question. So a homeowner's policy. Okay, so a homeowner's policy has something called other structures. So you got dwelling, you got other structures, and usually across the board, automatically you get 10% of the home cost. And that sounds confusing, but let's just say your house is worth $500,000. Let's say the dwelling replacement cost, the cost to replace your home.
To actually rebuild the structure.
To rebuild it. That's not counting the slab. That's not counting
Understood.
the land. That's not counting how much you think the house is worth or how much that has no bearing on that. It's how much would it cost to rebuild that house exactly how you have it.
Okay.
So that's what the dwelling coverage is. So if the dwelling coverage is, let's say, $500,000, then automatically the other structures is 10% of that.
Oh, okay.
So it'll be $50,000.
Okay.
So, but with some people who have pools with waterfall, not the pool, the waterfall.
Okay.
It's anything that's in the ground but not part of the house.
Okay.
But that doesn't cover the pool. Pools aren't covered because they're under the earth.
Okay.
You know? But we can go into that later. But as far as, let's say, sheds, detached garages, fences, that's other structures. So if you have something, pergolas, all of that. So if yours is over 50,000 in added stuff, then we would want to add that as an other structure on top of that.
Okay.
And it's usually very, very cheap to do it. It's just a matter of having those. I usually put my people up I look them up on the GPS, like on the Google Maps, and I'll zoom in and I'll kind of look at the area and I'll look on the, that's why it takes me so long to do a quote because I'm looking at every aspect to kind of see, okay, because sometimes you just forget. Like, I love it when people tell me, oh no, I ain't got nothing fancy in my house. I'm like, is your kitchen granite? And they're like, oh yeah, but that's just normal to them. And I'm going, that's not builder grade, homie. If I replace that, you're going to be a little upset with me if I put Formica in there.
Very true.
Yeah, so it's just about having the conversations where people, if I ask general questions like, hey, do you have anything fancy? Well, what's fancy to you?
Right.
I don't know. Do you have any detached structure? Nobody. What? I'm the only person that knows what that is. What do you mean other structure? I mean, so I try to kind of not dumb it down, but make it very layman terms where I'm like, hey, look, what'd you build? What's not attached?
Right.
Okay. But I look for myself and kind of see. I say, hey, have you put anything since this? And I'll send them a screenshot. I say, have anything added since this? And I'll say, oh yeah, I put in a casita.
Okay.
Or whatever, and that's where we're going to add it.
Outside kitchen.
All that needs to be if it's not attached to the house. Now, if it's a grill and it's not because that's attached to the land, like a grilling area, it's actually tiled in. You can't roll it away.
Right.
So that would be considered an other structure.
Okay.
And so would the waterfall that protrudes up from the water and pergolas and all that good stuff. But yeah, grow house would definitely be something we would make sure as long as it fell in that other structure category. And then if it was a rental, that would be still personal property.
Okay.
Because at that point, it's your structure. You could pick it up and take it with you.
Gotcha.
Okay. Because you're not going to make it permanent if you're a rental normally.
Right.
But yeah, that grow house would be covered, and then the plants in it would be covered on something different.
Grow what plants?
Any plants. I mean, if you had petunias in there, or if you had pot, I mean, it'd be this. To them, it's the same from what I've read.
Gotcha. What about the equipment itself, the lights, the
same thing? Personal property. As long as our limits were falling under those limits, then we should be fine. So I was just really shocked that they just covered it in plant, which is great. Yeah. To know, especially if there's a storm.
Oh yeah,
or something that happens.
Yeah, that's a very, very valid point. So if you could make a claim, because
wind, hail damage, all that stuff.
Some of the people that I follow, there's this really cool dude that lives out on the West Valley that has this really awesome homestead, and he was showing pictures that in one of the big storms that just hit, just annihilated his plants. Yeah, and I mean, and for some of the seeds, just to purchase the seeds themselves are
very
few
expensive.
$100 just for one seed. Yeah. Because the genetics involved and all that type of stuff.
Sure. And that's for eating, but and that's where you get into commercial use and things like that. We would just make sure that we're not making,
if someone is growing at home for themselves in Arizona, they should not be selling in any way, shape, or form.
Exactly. So that's why I'm saying if you're following the rules for your state, then we should be fine. It's just you can't come up and be like, hey, I had 5,000 seeds and, and just saying whatever wouldn't fall under those guidelines.
But now there is another question. There's very few of them left here in the state of Arizona. There's what's called caregivers. Okay. And I'm actually a little bit unclear on the specificity of it. So I don't want to ask
I don't know what it is, so you definitely have to tell me.
It's basically, if someone lived more than 25 miles or more away from a dispensary in the state of Arizona, you could have a designated caregiver. And that designated caregiver can grow for you. Okay. Now, I'm under the assumption that a caregiver is allowed to grow a lot of plants. Okay. I know someone who is a caregiver. They said there's very few of them left in the state. Sure. But she has over 200 plants, and it's legal. It's good to go. She's not selling. She's not doing anything like that. She's growing for these patients. So, but that's not.
And they're all the people that she's growing for are in Arizona.
Yes, they're all in Arizona.
So, I mean, again, there's so many little things, but I will say, in my opinion, that, okay, let's just say your homeowner's insurance extends anywhere in your, anywhere in the world, really. I mean, if it's your personal property and it's like, even if it's on a plane and you're in Europe, it's covered.
Okay.
So if you're there, like even in your car, if it's parked at somebody's house, that's your auto policy. Don't get that confused. If your car isn't covered on your home insurance because it has a motor, but anything with a motor, no. But anyway, with that being said, as far as if she doesn't own them and they're leaving them there to be tended and stuff like that, I'm going to take it just like plants, they're in transit, whatever happens, then you should be able to claim that on their home insurance. Now, if she has a waiver signed or something saying that she's responsible for them, then at that point she might want to have a commercial policy or something like that. But again, that's a conversation. When people call me with these things, I'm going, okay, let me go search for the thing, and then let me get with the underwrite. I get with the claims adjusters. That's how I do it. And I'll take the account that this is something that we are taking the policy on this stipulation that somebody on your team has told me that this is covered.
Gotcha.
So that way, if a claim pops up, my ass ain't grass and you're not mad, So I'm a bulldog when it comes to, like, if something happened, I make sure that my clients are taken care of, and that, not saying I could get the claim paid, but I stay on it and make sure that I noted the accounts to make sure that if we were told correctly, there's documentation to back that.
Gotcha.
So, like I said, it's getting with your agent, them getting that okay from, let's say, a claims adjuster that they have seen that in the past, or that they are okay with it and they would approve it, documenting it and making sure that we're putting them with a company that's going to cover that.
Gotcha.
So those are all great questions, and there's so many.
New.
It's
all new.
It is so new. Yeah. So
I'm curious if there has been a claim, if anybody has made a claim yet for their, either with these monsoons, with a grow or something like that. I'm very curious if anybody's made a claim yet.
And I've been watching this since I've been here, a year and a half now. Okay. And every time I move to a different state, this is my last stop, but because my husband works for the railroad and stuff, so we have moved around a lot in the past. I kind of take my time on looking at the area to see what kind of claims are happening and things like that. And that goes back. But the biggest thing I got here, I was like, flood insurance.
Right.
Like, why would you need that in Arizona? And I've been really shocked, like, because anything that people think flood and they think FEMA, they think like mandatory flood insurance. But if your pool overflows and comes into your house, if it touches the ground, it's considered a flood.
Okay.
So I've seen, even with my clients, where their yards fill up, and if it goes into your house, it's not covered on your home insurance. It's at that point, you would have to have a separate policy, and they're usually very, very cheap because we're not in a danger zone. So you don't have to have a FEMA policy, or I don't do a lot of flood policies. So if somebody's watching that's on flood, I'm learning more about them because now I'm worried about them.
Well, I can say this right now, that I'm an Arizona native. I left for 4 years in the military and came back. So I remember monsoon storms in the 80s all the way up. I don't know what the hell is going on, but the violence and the intensity of the storms that are happening now are levels above what I remember growing up. So there are tons of floods. I mean,
exactly.
It's what
Phoenix has been bad too.
It's August 4th right now, and we just had a huge storm that rolled through the valley today, and everything's flooded. Yeah. So I think that, I don't know what's changing. Yeah. I mean, I'm not going to say the climate control or climate change or whatever the case is, but something is very definitely different.
Right. Yeah.
And shit's getting flooded now a lot.
And especially for the people who are snowbirds and different things like that, where they're not home all the time.
Right.
If the pool doesn't happen, I mean, if something happens and it doesn't, because it's supposed to auto kind of, and I have a pool, and if the elevation's not just right, and if things go, I mean, it could easily come into your home.
Easily.
So I try to encourage, it's really hard because I'm seen as like a salesperson, I guess you want to say. So it's really hard to find that fine line between educating, and I prefer actually to tell people who aren't my clients about that, because of the fact that I don't have any benefit to that.
Right.
I'm like, look, it ain't gonna hurt me or help me, but look into it. Especially if I'll go to their house and I'll look at the yard and I'll go, this is a risk. Yeah. You need to talk to somebody about it. And like I said, I always feel more comfortable when they're not my client too, because of the fact that there's nothing. It's not salesman-y, I guess.
You're not. People also need to understand too. You're not getting a commission off of it. You're not making money off of them. You're trying to help and educate.
Well, we get commission. Don't get it twisted, but so does the call center.
Right.
But it's just different. Well, I guess for me, it's different. It's like I don't care so much. Thankfully, my husband's the breadwinner, so I don't have as much, I guess, stake in like
Gotcha.
if things like that. And I think that's why I'm so successful with it, because I don't have that feeling of urgent. Like I'm not pushing people.
You don't need to make the money.
Exactly, right. But I'm not saying I don't do well,
Understood.
but I'm saying that helps me because it's not pushy at all.
I want the people that I hire and utilize to be really well educated and knowledgeable. I want you to make a lot of money.
Yeah. And like I said, I do very well for myself, but I think not having that pressure of it helps. But with people, I just get a little, when it's stuff like that seems frivolous. I don't know if it's going to happen. I know you need home insurance. You have to have it for your mortgage. Your auto, you have to have it for state. When people have more stuff to lose, if you don't have a pot to piss in, for better words, you don't really need as high of limits, because they can garnish your wages,
Right.
but they can only do that to a limit. But if you have a $500,000 house and you have things you can lose, well, we need to have better coverage. That's just fact. I love facts. I'm a fact girl. I don't know for a fact your house is going to flood. So for me, it's hard for me to be, I know you're going to die. I mean, it is what it is. I know that you have to have home insurance. I know you have to have autos. That's me. You already got to have it. It's just a matter of, I'm going to give you the best of it. That's it. It's simple. I like simple. I like clean. I like facts. I don't know if your house is going to flood, but do we want to take that chance? Well, that's what insurance is. I mean, it's taking that chance.
You may never use your insurance, or you may use it 10 times in a year. You have no idea.
God, I hope not. I hope I'm not there. No, because I don't want to see that bill next year.
Right.
Yeah.
Well, but it's just like down here where we're at, the Queen Creek, Santan Valley area, when this was up and coming, you said you've only been here for a year and a half, so you probably are not unaware. Back in 04, 05, 06, back in that time period when this place was just coming up, they didn't realize that there were sinkholes all over the place and foundations were cracking.
Yeah.
And then coming off of Santan Mountain, a bunch of homes off of like Riggs Road were getting flooded and all that good stuff.
Right.
They didn't think of those things.
Yeah.
So you had people building these brand new gorgeous homes in a brand new area. Next thing you know, a fucking hole opened up and swallowed their house because they didn't do the studies. They didn't do the proper studies.
Exactly. Yeah. And that's where it gets really coming, like earthquake coverage. And I mean, all these are a lot of them. It was funny. I had a client in Kentucky that in the HOA for his townhouse required earthquake coverage, and I was like, what? And then I looked it up, and sure enough, there had been like some big old shakes in the area, and so they just made it mandatory. But he was all, he's a railroader, so he's all piss and vinegar and fun. And I was like, look, and we kind of laughed about it or whatever. And I said, he's like, well, I said, you paid more than this in your other state for just your home insurance, so it wasn't expensive. But it's those conversations of, hey, if you got a pool, you might need this. And to be honest with you, I'm adding it. When I have it, it's going to cover my earth movement and cover flood.
Gotcha.
Because I've been here a year, and I've kind of looked at the law, and I'm like, okay, if there's a more than a 20% chance of it happening, then
it's good to have.
And I'm already saving so much on. I mean, how much do we save you? I'm just saying, like, usually I'll save about $2,000 a year normally.
You say you're gonna save me once my policy kicks in and the other one's done. It was like over 50% a month.
Yeah,
I mean, that's a ginormous amount of money that's I'm saying.
And better coverage.
And way better coverage.
So it's not like we're taking a loss. So I don't want to encourage people to be always cheaper. Cheaper's not better. Full coverage isn't better coverage all the time. It's just depending on the evaluation of the situation. But usually, and with dealing with me and other agents like myself that are very familiar with the right ways to put in a policy to make sure your rating is the best for your circumstance. I'm not saying to lie about your rating, know to make sure I know what you do so you get a better rating, or to make sure all these things are put in correctly so that we get the best rating. That ends up saving you so much money that you can afford a life insurance policy. You can afford a flood if you need it. I'm not saying to use up all your money for that. I'm just saying now you'll pay 75% less than what you were paying before. You keep 25%, and now you're covered against everything. That would be my goal, and when I deal with people, is to say, hey, I'm going to save you a lot of money, and I'm going to make recommendations. And if I make the recommendations and I told them about the flood, and I told them it was only $40 it was $200 a year or something. And they're like, I'm good. That's your choice.
Right. But they get to make the choice.
Down.
Yeah. They get to make the choice.
Noted. Noted.
And I think just the really, really hard thing is to understand the looking 20 years to the future. That's really, really the difficult part is why would I do this now? Why would I set myself up now? When again, I didn't have these thoughts until I was in my mid-20s. And then I started realizing, and again, my previous profession, I got to see a bunch of terrible stuff happen. Yeah. And I was like, oh, anything's possible. So
yeah. I mean, it's always, I do, like I said, if they're really, everybody wants to be an entrepreneur. The younger kids, they're like, oh, I'm going to be an entrepreneur. What are you going to sell? I don't know, but that sounds great, But even for those kids who are like, they have that mindset and they want to do that. I mean, people go, oh, when I first started doing this, they were like, oh, I don't have kids. I don't have a family. Do you have an adult you take care of? Do you have a mother that is ailing? Do you have anybody that depends on you financially? That's the question of does your wife have student loan? Oh, and I love this one. Oh man, I want to punch somebody in the throat. They'll go, oh, my wife doesn't work. We don't need life insurance on her. Okay. How many kids y'all got? Oh, 3. She stays at home. She feeds you. You're telling me you got a cook, you got a nanny, and you got a chauffeur.
And a chauffeur.
And if they die, you don't have to pay anything. It won't cost you no more. You won't lose anything. You won't have to hire people to replace that person, regardless if you sleep with her or not. Free labor. I mean, I guess you could replace her with one. Even mail order brides cost money.
They're really cheap from the Ukraine right now. So I shouldn't say that. I was just joking.
I'm not offended, but some people might be. But no, but I say that because. And I'm not one of those women who are like, oh, women. No, but know what you got at least. Know what you're going to have to pay for. Just take all of the rest out of it. Financially, it's a stupid decision because you are going to be hit with all of those and sad. I hope.
If the stay-at-home parent, whether it's male or female, we'll be politically correct for a second.
Yes, I forgot about that.
If the stay-at-home parent passes, I mean, that other person still has to go to work and make money and can't be at home to take care of all the stuff.
Mail order husbands are even harder to get.
Well, they're going to make more money.
Let's make it evenly offensive, okay? I mean, don't write it wrong the way. Yeah, mail order, I've never heard of them, so I mean, it'd probably be really hard to get one, but it's getting somebody to stay at your house for free. Anyway, so maybe they're one of those people that stay in with their parents.
There you go.
Sorry, off in left field, but no, that's just where it comes in. You're going, but I do have those savvy ones that see it for what it is. It can be not. I want to stay away from the word investment. It's not.
It
can
be protection.
It is protection.
It's protection.
And you can actually use that in your favor. With other things, it's multifaceted to where you can say, oh, good. Okay. I wanted to get that. Let's just say a person who has a loan they have a life insurance policy for 20 years on their, a 20, 30 year policy they've got. And like that index UL that I'm doing for my son I'm waiting for it to go through right now. That's why I said I'm looking, but, that I'm replacing my other policy with that. And when he gets to that point, if normally he'd be like, oh, I want to add let's just say I want to add a casita and it's going to be 25, 30. That's a cheap casita. But, let's say I want to add this or I want to do a remodel. Okay. I'm going to go to the bank and get $25,000, $30,000. Well, in this, he has the option. If he has 70 grand in there, he could take up to 90% without penalty and borrow it. Gotcha. And then he just has to pay that. He has to pay the money back into it. He does have to pay.
He's paying himself back,
but he's paying himself back, and the interest that you would have lost, you pay it back to yourself too, so that because you're making money on you're gaining interest on it's tax deferred.
Yep.
First, so whatever gains are made is tax deferred, and you're making not a profit. You're making gains on top of that tax deferred money and on top of that other. So you're just paying there's not a loss there.
Right.
As far now, there's always risk in everything, but that's got so many facets to leave it alone that, it's just could be used so many ways. That's another thing where you have that conversation with your agent and you say, hey, I tell my people all the time, I'm like, you're getting a term policy for 20 years. Okay, if you're in your 20s or something like that, let's just say you're paying $25 a month or something cheap, right? I say, okay, if we do 75, that's a lot more money. But how about if I could guarantee you get every dollar back you ever put in?
Right.
And you're still going to get it back at 20 years. And if you have cancer at that point, You can keep it.
Well, and like, one of the things, I mean, there's no possible way, like for emergencies, you have no idea when an emergency is going to pop up. I mean, look at Arizona. It's 115 in the summertime. Your air conditioning units go out. One air conditioning unit now is $12,000. Who the fuck has 12 grand just sitting around right now?
No, yeah, exactly. And you can, and like I said, if you got that for your, and if you got that for your kid, you own it.
Yeah.
If you don't, if they turn into a little shit for God, and I'm being really bad, but I'm just saying you own that policy as the parent.
Gotcha.
So even if they go off and they're like, screw you, I don't want your policy, that's yours.
That's mine.
It's yours. You can do what you want.
I'm taking the money and running.
Yeah, well, you could cash it out and keep it. It was a gift. I mean, it's you have to have a reason to have life insurance on someone, as their parent, as I have life insurance on my ex, and because we still have a child together, and he knows it. He signed off on it because of the fact that if he dies before my son's 18, he needs to take care of my kid.
I don't think my ex-wife is going to sign up on a policy. We have a contentious relationship, and that's all I'll leave it at.
Yeah, no, and I get along great with Alex's dad, So, and he was like, "How much are you going to get?" It's kind of a joke. I said, "Look, nobody else likes you. They're not going to bury you." It was a joke, But he was like, but you have to have there's a reason there. And I only got a policy for that's last until my son's 18, and then it is what it is.
Gotcha.
If my ex wants to continue to pay for it, then he can become the owner and take over that. But that's protecting my son.
Yeah, 100%.
Because he will lose that money that would come in normally to help take care of them. So a lot of divorce attorneys now, it's mandatory to have life insurance until the child's 18.
Wow.
On both parents.
Okay.
So they're kind of a held trust policy that is for the child.
Okay.
So I see that a lot, and we actually have a lot of attorneys that I work with that handle divorces, and both parties have to have a policy shown, and that beneficiary is shown as the child, or depending on how it's set up.
Right.
But they have to hold that until they're 18. They can cancel it after that point. They can do whatever the hell they want to with it. But they do have to have one on themselves. They pay for it themselves, not the other person.
Right.
So they don't have to get approval for that, but they have to make the beneficiary the person who would be taking care of the child.
It would be very suspect if I suddenly took out a life insurance policy on my ex. That's all I'm saying. I do want to wrap it up here soon,
sure.
but there's another thing that we wanted to touch on. It was the one thing you wanted everybody to know.
Well, and that was the one thing I think it was our discussion. I was like,
Yes.
I wish everybody knew this, but. Again, I'll say it.
It's a little touchy. I know.
It is a touchy thing because I definitely don't. I'm one of those people that I handle so many companies that I'm very I don't talk bad about anyone.
No.
So, but
You want people to be protected.
I want to say that it doesn't matter, like whatever company you're going with, I want people to be open to not just the company, but to be open to getting a good agent and making sure you're going with a company that is that has agents available for you to have personally. With my husband being a veteran, and my father was a Marine sniper. My husband was a Navy CB, or Navy. They're always CBs. They're always Marines. So I don't want to say it like that. But coming from that, I take a little bit of, and I don't like to use the word offended because I don't really like sensitive people too much. But I'm gonna say that it kind of rubs me the wrong way when I see people targeting a community that's very driven by camaraderie. That's the best way. I'm not going to say names. I'm not going to say anything like that. And definitely nothing wrong with any of the company. All the companies are just, for the most part, it's the same. It's based off of the same thing. It's risk and stuff like that. But it does rub me a little bit of the wrong way that a lot of people stay with some companies just because of who they're promoting or just who they're marketing. Yeah, just because of the name, or like even, I don't want to say, State Farm or Allstate or any, that's not who and I'm just saying any of those companies, their companies are all inclusive.
Right.
We all do the same thing. It's the question is does that, because I move my people around.
Right.
I move them because as you get older, your risks change.
Right.
When you have a youthful driver, different companies market toward this. They pay more. Not pay more. You pay less to those companies because that's the preferred people. So to say I have one company that's like, that would be like, oh, we only handle doctors.
Right.
And we give better rates to doctors. Well, you can't say that because insurance goes by age. It goes by demographic. What job do you do now in the civilian sector? It goes by all of those things. So how can you give a better rate and guarantee it for different parts of life when no insurance is made for all of that.
Gotcha.
So I guess
it's nuanced. I mean, everything that we've talked about is completely nuanced on situations and risk. And I'm sure if I was out there skydiving and bungee jumping and you know, free rock climbing and all that good stuff, I'm sure I would pay a fuckload of money for a life insurance policy.
Well, actually, some of them deny it. Some of us,
right. So there you go. You're not even going to
pilots,
have it.
You know, so depending, they'll ask you other questions to follow up to it. But it's just to say, know your benefits. Don't stay loyal to companies just because I live off people being loyal to me.
Right.
But I earn it. That's all I'm saying. I work my ass off every day. And, you know, I've gotten 36 calls in the last 2 weeks for renewals.
Okay.
Just for people saying, my price went up $10 or it went up this, and can you check it out for me? That's what, okay, yes. Because at that point, if you went over 60 years old, or you went over this, or you added a useful driver, if your situation changed, if you got married, if you changed jobs, all those things can affect your rate.
Right.
So my job is to know what things affect and what carrier fits you the best. I don't, and not to plug anything, but you hear some commercials say things like only pay for what you need. That's what that's meant for. You know, it's meant to say, if you're a different risk, let's put you with the right carrier. Right. To say, you know, that's you know, it's like paying for maternity coverage on a man. I mean, like, do you need to have a you know, coverage for birth? No, on your medical insurance, you don't need that because that's not a risk for you.
It's not a risk.
So why should you have to pay for it?
Right.
And that's my whole thing, is that a lot of people stay loyal to companies because they're like, oh, they pay good. Well, really?
Well, you know what?
They better all pay good.
Well, the thing is, though, too, is that, like, I have stayed loyal to the company that I was with just because it was easy.
Yeah.
That's literally the only reason. And I never bothered to branch out until it was like, oh, shit, that went up a lot. So now that
it had to hit you in the face.
It did. It did. Like, I was willing to go up incrementally a little bit here and there. And the next thing you know, I'm paying over $400 a month. And I was like, wait a minute. And then all of a sudden it's like, I can't be loyal. And I will totally admit, like when I said earlier, I was joking around. Like, I've been with the same company for 24 years and it feels like a breakup. I'm like, because I have loyalty.
Right.
So I have loyalty to this company and I shouldn't. I should be, you know.
Well, if you think that company will take they should pay well, and it does matter if they're reputable. You know, like I don't deal with. I look at who's paying my clients, and I know that as an agent, and it's just sad to me when I see. I don't really have it happen that often because I'm referral. So most people I met you, and they trust me, they know me, and they're going, okay, I trust you to find me that, and because we went over so many things I've never even had talk to me about it. But I'm not saying trust every agent either. I'm saying make sure you're doing your homework. It just really, my husband was the same way. When I met him, he was with Allstate for freaking ever, you know, and that's not a bad thing. They're a great company for the right risk. They're not one of my companies, but they are a great company for the right risk. But knowing those stipulations, I know my competitors in and out. Gotcha. I mean, that's part of being good at what I do. Right. But, you know, to target a market that is very vulnerable to camaraderie is very, I don't like it. Yeah. I don't like it at all. And I'm not saying that you should feel exclusive, but when I've got a husband that's a veteran, he has PTSD, and he looks for nothing more than to be in part of another group again. And I mean, I almost tear up a little to think about that. But
it's predatory.
It's very, to me, to target that kind. And I have a lot of veterans that come, oh, well, you know, I'm going to check this because it's my people. Yeah. And I go, so I'm fine with it at a certain extent, but to me, that when I hear that, I'm like, I know what they're going for. And I guess at a certain point, if it gives you that much comfort,
it might be worth it.
It might be worth it. It might, if it makes you feel that same camaraderie you felt when you were in the military, which I know nothing can do that. Right. I mean, I have a father that's a veteran and a husband that lacks that all the, you know, that's the part that he misses the most. Yep. You know, so and I think a lot of people go. That's why people go into bike clubs, or they go into, you know, you see bike clubs. You see people go into the become a cop or a trooper or something like that because of the fact that to have that team. But there's no replacing that.
There is none.
I don't. Not after talking. Like I said, I'm very apt to listen because of what I was raised by and who I love every day. I mean,
I can say this, that I did 4 years in the military. I did 11 years in law enforcement. I have not seen some of my military members since I left in 2006. I am closer to them than I am the coworkers of my law enforcement career of 11 years. I don't talk to any of them except for a couple of them. But that camaraderie in the military. Now, I was not combat. I never went overseas, nothing like that. But still, just that it's just a different breed.
It is. You'll die for your people. That's what my husband. I don't know from personal. Like I said, I'm very empathetic, and with him and we've had so many of the guys that he served in the Seabees with. And my husband did go. He is a combat veteran. And they've come to our house, and since we've been in Arizona, we've had like 3 of his old buddies from the Seabees that he hasn't seen in 15 years. And it was like they've taken off and they're going to Sedona and they're having a great time.
Didn't miss a day.
No,
it's like there's no time elapsed at all.
I think, and I see them mourn over the suicides and everything, and it's like, what could have I done?
No.
And I. Like you said, even with the people I know that weren't, some of those people he didn't go to combat with. They were just in this certain, like home port with him or this kind of thing. Port of his battalion, depending on where he went, because the CBs, they do building projects, so they branch off. But just to see that, I love seeing him that way. But I never seen anybody have an insurance company that gave gave them that same loving feeling, for the better lack of words. And I guess, in a way everybody wants to feel that, but to have any kind of company target something that I love so much, I just feel like, and I didn't want to even bring it up. You were like, you should just say it. And I'm like, about it.
But it's honest.
Yeah, it is. Yeah.
It is honest. And it's, but at the same time, it's almost as though it's attached to military service as well. So it is predatory.
Yeah, and especially when it's not like,
but that's
just
not
their stuff. I mean, they're not owned or it's a
that's
mutual
not
company.
to say that the coverage they provide is bad
no,
in any
God,
way,
no.
shape, or
No,
form.
no.
That's not what we're saying. It's just,
and the service is amazing.
Yes,
I've heard that. Well, I've heard it's just like every company. You have different experience with it, but that, again, if you have an agent that's taking care of you, your service should be your service.
Right.
It shouldn't be a call center. I mean, well, like I said, I do service. I walk my clients through doing it themselves, having things like that. But if you've got a good person,
it doesn't matter.
It doesn't matter. As long as, like me, I don't deal with anybody that's not going to pay my people. But but that's pretty much it. I think we covered a lot.
We covered a lot.
Oh my gosh!
And it's all relevant, and it's all extremely necessary and important.
Yeah.
So leave us with your words of advice.
Let's see. Just let's see. What? See, you should have warned me. I would have had like a good little nugget.
I like on the spot.
I mean, I guess circling back to what I said before, regardless if you find an agent or not, full coverage isn't good coverage. Don't have full coverage on cars that don't need full coverage. A piece of shit. Things like just know your coverages, because if you have anything to lose, if you own a home, don't leave that to somebody you don't know.
Right.
That's all. I mean, I don't care if it's me or if it's another agent or where it is, but find somebody who gives a crap about you, or at least has the decency to explain to you, because you yourself cannot find out how much your costs. How you can't do those kind of things that we do. You can't do a risk analysis. You can't do all those things to figure it out. So just make sure your shit's covered. Just if you got a teenager, have an umbrella. There's my.
There you go.
If you got any of the 3 Ps,
pit bulls, pools,
and puberty is what I say. But you could say pimples if you wanted to. But I mean, it's like teenagers, because they're all risk you can't control. You can't control who drowns in your pool. You can't control your teenager. You can't control your dog, because in the right situation, even the best dog will bite.
I just finished litigation of over 2 years of a dog bite. A dog unprovoked attacked me, so I'm fully aware.
Yeah,
of
and
what that was like.
Not the owner doesn't. They're not. Most people aren't just putting their dog out there to. I have all 3.
You have all 3.
I have a pool. I have a pit bull, a rescue pit bull at that, and I have an umbrella.
Yeah.
But just know your risk. Talk to your agent. Don't be silly, because and I know I've already talked too much, but it's actually sometimes cheaper to have better coverage, because the insurance analyzes that, and they look and say, hey, this person is not properly covered. They are a higher risk because they're ignorant to what they have and what they could lose. And if they're that ignorant to that, then we don't want them playing with our money either.
Gotcha.
So just know, I mean, most of the time, if you have better coverage, some companies won't even take you if you have state minimums. They won't even look at you.
Really?
No, that's 100% for sure. So don't think that having higher, don't see dollar signs in everything I'm saying.
Gotcha.
Like I said, most of the time we can do better coverage for a lot less, and that's because you're actually properly
Right.
covered. Yep, that's how I'll end it.
Well, Bama, thank you very much.
Thanks for having me.
This has been extremely informative.
Okay,
so
good.
thank you very
Hopefully
much.
they feel that way.
Right?